Hello, everyone. Welcome to another episode of JMMB Goal Getter Live. I am Nadine Thomas, your host for tonight and manager client partnership at JMMB. So, having focused on the men with our All Man Talk series held during the month of September, we have flipped the script and will be focusing on women during the month of October. Can I say welcome, October? In our weekly webinars going forward, we will be covering a range of topics focused on financial and lifestyle issues which affect women. So we want to welcome everyone that has joined us thus far. And for those who are about to join in, welcome, welcome, welcome. If you are new, we are so glad to see you tonight. We meet here every Tuesday at this time. And to give you some background, we started these webinars at the beginning of the pandemic, and the responses have been phenomenal. Feel free to check out our previous episodes on our Facebook or YouTube and LinkedIn pages. So for tonight, our focus will be on women's investing style. Now, there's this myth that investing is just a man's game. Tonight, we want to debunk that myth because financial equity and independence are just as important to women. So for those women who want to build and grow wealth, having the right investing skills and strategies become very important and are key in how we move forward. Many women seem to think that they lack the knowledge and the insight necessary to grow their money through investing. So tonight, we want to help you to improve your investing skills so that you can build wealth. And so we have invited two very special team members here at JMMB to share their expertise and their insights. And so we want to welcome Nardia James, Branch Operations Manager Investment. Welcome, Nardia. And Roxanne Clark Kroll, Manager Investment Client Partnership. Welcome, ladies.
Thank you much.
Goal Getter Live. Are we ready to get started?
Yes,
All right. Awesome, awesome, awesome. All right. So, Roxanne, we want to start with you.
Sure.
There is this talk about investing style. What do you define investing style to be?
All right. Well, the investing style is really the method by which an individual or an investment manager chooses to approach investing. And therefore, they're taking into consideration the individual's risk tolerance, the time horizon, and the expected or anticipated returns that a portfolio could potentially yield.
So you talk about investment styles. What are the different types of investment styles?
Okay, so we have three investment styles. We have our conservative investors, where ultimately the primary focus is on capital preservation. These are the investors that want to see their money. They actually want to get a guaranteed return on investments. They actually want to see their money grow. Then we have the moderate investor who is willing to take on some amount of risk, just enough risk to still allow them to sleep well at night. And therefore, their portfolio would typically be mixed because they're willing to take on some risk, but not too much. Whereas on the flip side, we have our aggressive investors. These are the investors that actually seek out opportunities, and therefore they're willing to take on the risk with the anticipation of heightened returns.
Okay, interesting. So Roxanne, tell me, women are sometimes said to be a bit complicated and unpredictable. How do I, as a woman, identify my investment style?
Well, at the end of the day, Nadine, it's a matter of comfort. Um, your financial advisor will actually support you and arm you with the information. There are specific questions that we often ask, which will give a clear indication as to what is most important to the investor. And therefore, you will be able to pick up based on those questions. And typically, is it that you would prefer to see your returns? You don't want to take on any risk. These are very straightforward questions that you can ask yourself, even with the absence of a financial advisor. I mean, you'd be better guided because once you're armed with information, then it empowers you to make the most appropriate decisions for you.
Okay, awesome, awesome. Nardia, a question to you. Why are women seen to have different investing styles from men?
Well, women are seen to have different investing styles than men, Nadine, because we women we tend to be natural nurturers. We tend to be more conservative and risk averse. So most women with children, especially, we're not willing to take on certain risky investments as they tend to think about the family's future, the child's education. So when we hear about risk, then we're turned off because that's not our natural way of being. We like safe kind of investments, and we always want to have a sense of security.
Mm-hmm.
Men, on the other hand, they tend to be like investment daredevils. So they're willing to take on risky investments as they tend to be less cautious and more aggressive than women.
Okay. Okay, thanks, Nardi. So, are you then saying that women are a little bit more risk averse or a little bit more risk conscious than our men are?
Most definitely, I would say that women tend to be more risk conscious than men, as we tend to think about, the family and the children. Men, they're more interested in the gains that come from these aggressive type portfolios. So we tend to look at the less risky type of investment than in other words, as women.
Okay, awesome. So pretty much you're saying it might be a biological makeup then.
I think so.
Okay, awesome. So you touched on some of the goals. You talk about children's education. So there are different goals that women sometimes have. We have the need to go back to school. We have the need to pursue higher education for our children, emergency funds, to save for home, to build and grow our wealth, and just to do general investing and to meet different goals. Rokon, why is investing such an important part of personal financial management?
Okay, so it's extremely important because we work hard. We make the sacrifice to put some aside, to eke out some of the monies that we earn. And therefore, it's important that our money is working for us, right? So we continue to work, but ultimately, in order to get to our goals, it's important too for us to have a more focused and deliberate effort around getting to the goal. And that comes through investing.
Okay, awesome. A follow-up question to that, Rokon. Why is our savings account alone not enough to meet those investment goals that you spoke of earlier?
Okay.
Or is it enough?
Is it enough?
Yeah.
Most certainly it would not be enough, because your savings account really and truly is that it's a vehicle for you to park funds. It is the most conservative mode of just putting down some monies, setting some monies aside just for safekeeping and for your more transactional type activities, realistically. You would want to have a clear separation where you are focused and being very deliberate around the things that you tend or want to achieve. And it is in so doing that you would now have your conversation with your portfolio advisor. You sit down, arm yourself with information as well, and therefore you're looking for investment instrument within which you can place the funds that you do have, that you won't necessarily need for just your short-term transactional type activities, but more so being more deliberate and focused around getting to those specific objectives that you would have, which
Okay.
is, as Nardia had actually shared, they sending the children to school, acquiring assets, you know?
Okay, so pretty much you're saying savings alone is just not enough.
Not enough.
We need to look a little bit further in looking at investing, how our money can work for us. Those are the specific words you use, making our money work for us as women because we work hard.
Exactly.
Okay, so tell us, Rokan, what are some of those instruments, financial instruments you refer to when you talk about financial management?
Okay, so most certainly, even before we approach the purchase of assets, really, we want to ensure that we have some money set aside as an emergency fund, right? And this would basically be 3 to 6 months. We hear it so often. We're putting aside 3 to 6 months earning in order to cover our expenses in the event of any eventuality. And then outside of that, now you have your money market type instruments, you have your unitized funds. And when I refer to money market type instruments, these are usually offered by a brokerage facility. It's investments or instruments rather that are purchased whole scale and give you the opportunity to participate on those instruments. You have what we refer to as unit trust type investments, where you may not have the technical know-how or want to specifically manage a portfolio for yourself, but more so you can buy into a mix or a combination of assets, which gives you a diversified view to investing. And outside of that, of course, you have the equities market, which is the purchase of stocks and bonds, really, outside of equities.
Okay, so Rokan, can you give us an idea of what the returns are like on these investments, and more specifically, are these returns guaranteed?
Okay, well, there's some, and it comes back again to the investment style. There are some assets that will give you a guaranteed rate of return. Your Government of Jamaica type instruments, where you're actually buying a security outright or participating on an offer, and you have a set return associated with that offer. You actually have bonds, which are debt instruments that are issued by a creditor or a company or an entity, basically, and those tend to have very specific payback in terms of a maturity date, as well as what we refer to as non-payment. As it relates to returns will vary. Optimally, what you would want to do is to have a mix of assets. You hear your grandmother will always tell you, or you hear the local term, don't put your egg in one basket, you know, and therefore you want to have a mixed approach in terms of your investment choices and assets that you would actually incorporate in your portfolio. So I wouldn't really say specifically to just quote you a return, because again, portfolios are actually tailored, or investments are tailored specific to individuals given their risk tolerance, as shared before, specific investment time horizon, and therefore taking into those factors into consideration, we would then look at the projected return based on the assets that are incorporated.
Okay. Nardio, I throw this question over to you, coming off the heels of what Rokan has shared about the different investment options. How much should an investor invest out of our income?
Well, really, there isn't a fixed amount that we normally recommend. What we do recommend, as Roxanne said, was to ensure that you have an emergency fund set up with at least 3 to 6 months of your salary. And after establishing that fund, we normally ask you to do up a budget and set a line item in that budget for investment purposes. So you know that you pay yourself first when you get your salary. So that's like you treat it as an expense. So I would recommend that you journalize your goals or you make a vision board, so you know what you're working towards, you know what you're saving towards monthly. I find that when you do this, you're more inclined to save monthly because the goal becomes so real to you. You visualize what you are working towards. You may think that you don't have the funds to start now, but there is no time like the present. You may even say to yourself, hey, let me just wait until the next 20 years when the kids have moved out and they're grown and all of that. No, the time to start is now. You also need to take a look at your spending habits. One less shoes, one less trip to the salon. Maybe you can do your nails yourself. There are so many ways that you can save an additional sum out of your salary. And at the end of the day, you want to achieve whatever goals you set out to achieve in life. So it's a very small sacrifice to pay for a lifetime of enjoyment. That's what I normally say to people. So you save when you're young, or you invest when you're young, so you can enjoy the benefits as you get older in life. And what I normally do is to just spend a day when I pretty much daydream and picture myself in doing whatever goal that I've set out to. Say, for instance, my goal is to buy a house. So, I would visualize what the house would look like from I was handed the keys to how I would decorate it. And then I can have this at the forefront of my mind. So every month and when I get my salary, I know that I need to put this money aside to, achieve that particular goal. Right. So there isn't a set amount or anything. It's just what you can afford. And like I said, to cut back on your expenses and all of that. So it's really a good feeling when you achieve your goals in life. And when you think about how hard you work for these funds, and at the end of the day, you can reap the rewards of you just saving those funds and investing those funds properly, then it's a really good feeling. So sometimes the hardest part really is getting started, getting out of the starting blocks. So here at JMB, we are willing to help you to get out of those starting blocks so you can achieve your goal and be happily ever after in the future.
Okay, thanks, Nadia. So you talk about goals, you spoke about budget. I am sure I speak for a lot of ladies who are joining in tonight in saying that over the COVID period, we found a lot more time on our hands to do a lot of other things, which also include browsing. We see a lot of more emails coming in about sales on shoes. You spoke about the shoes, about the handbags. We see a lot more of that coming in. How do you advise us then to create that balance between maintaining our investing, maintaining our goals, but still maintaining the chic look and the trendy look that so much of us aspire towards as women?
Right, Nadine. So instead of maybe buying a pair of shoes every month you may switch it to every other month, so you'd save that money towards investing instead of going to the salon. There are so many YouTube videos out there that teaches you how to do your hair and nails. It's something that you can try yourself even once, and if you like it, then you can continue doing it. You are saving money at the end of the day. You're going to invest those funds for a bigger goal. Like I say, you start small, but in the end, everything adds up, and you really want to achieve your goals that you set out to achieve.
So pretty much you're saying, Nadia, being disciplined is important, and sticking to the budget that you spoke about earlier becomes very important, even in this COVID period that we're going through.
Especially in this COVID period that we're going through. Yes.
Okay, awesome. Rokon, you spoke about stocks, you spoke about money market instruments. How do one invest in the stock market?
Okay, well, in getting established and participating in the equities market, stock market, it's quite simple. I mean, you can visit your broker in order to establish an account, a brokerage account, basically. And from there, it really is around identifying a company that you want to place funds on. Because typically stocks are actually purchasing ownership in an entity. So it has to be a company with which you identify, a company that has strong management, a company within an industry worthwhile placing your funds. Outside of that, I mean, the ultimate expectation when you are actually investing in the equities market and purchasing stocks is with a view to participate in their profit sharing. So at the end of the day, you know, it's not a charity. You want to be getting back some sort of return, and there's long-term viability for that entity. And therefore, it is all about whether or not it's going to show up as capital appreciation. That's where the stock value actually goes up. Or if it's a case where there are consistent dividends payments coming to you. So getting started is quite simple. It's usually very inexpensive to start. Some accounts start at minimum 1,000, like our account at JMB. And then outside of that, you have your IPOs. That's the initial public offer, and you have a lot of APOs that are actually coming out as well, where it's an additional public offer. And therefore, in some instances, even the minimum values to start an account is actually waived when you have that sort of activity occurring in the marketplace. It may mean just simply purchasing the minimum amount to participate in a particular offer. But as little as 100 units once you've established your account.
Okay, awesome. So everyone can get started. Another question to you, Rocky. What are the most important things to consider before purchasing stocks? And are there anything specific to the different sexes? Is there anything specific to female, or is there anything specific to male that needs to be considered before we embark on this journey?
Absolutely non-specific to the sexes, right? It is really just a matter of identifying, again, as I've indicated, a stock that is doing well, that given the industry within which you're looking at, that the industry is one that can have you maintain the investment that you are putting down. Because how you benefit from purchasing stocks, as I've indicated, is by virtue of whether it is the stock price goes up. And so everybody wants to buy a good stock that actually shows that level of appreciation, right? Where the stock price is going up. Nobody wants to invest their money and buy their stock at a particular price, and then all of a sudden, I mean, it's downhill from there. It wouldn't mean that your investment would have been eroded. And so you want to look at strong management. You want to look at dividend policy. You want to look at management structure. You want to look at the opportunities that exist as it relates to the company. Where are they going? How viable are they? You know, how well are they doing when compared to their peers? Those are some of the factors that you would want to consider when you're looking at buying into an entity, because that's ultimately you are now taking up ownership in that company, and you want them to be profitable so that you can get your stake of the pie.
Okay, awesome. So we're really getting into it now. So we talk about stocks, we talk about bonds, we talk about women's investment style. What is the difference between stocks and bonds?
Okay, so with stocks, you're actually purchasing ownership. So you become a part owner in that company. You are participating in their annual general meetings. You have a vote whenever there are specific decisions that require shareholders participation. You are benefiting by way of profit sharing. So when they are actually profitable and decide to declare a dividend, you have your dividends to collect, having invested in that entity, right? So you're purchasing ownership in an entity. Whereas with bonds, this is actually a debt instrument that you are buying into. It has a specific face value or a participation value. It has a set maturity date, and it actually has a stream of income that would be assigned to that asset. And so those factors will be very clearly established from the get-go. And therefore, you're participating in that asset for a while. Whereas with equity, as long as the company remains viable, you continue to be a shareholder in.
Okay, thank you, Rocky. All right, so Nardio, we spoke about women's investment style and women being a little bit more conservative than men sometimes are. When we talk about compare stocks and bonds now, are stocks safer than bonds, or are bonds the safer way to go?
Bonds are generally considered less risky than stocks for several reasons, as most bonds pay investors a fixed rate of interest income, which is your coupon payments, and it is backed by a promise from the issuer of the bond. So that they'll pay back at a specific date in the future. In terms of stocks, sometimes dividends are paid, sometimes they are not. It depends on if the company makes a profit, and also if the company decides to pay those dividends that would determine if the shareholder gets payments. I would say that bonds tend to be a little bit safer than stocks in that regard. Sorry.
Okay, so having identified my investment style via discussion with my licensed financial advisor, then that person might be able to guide me as to which product might be best suited for me based on my goals and my investment style, correct?
Correct.
Okay, awesome. Is there a minimum amount that is needed to invest in bonds?
It depends on the kind of bond that you're purchasing. We have some of them which you can purchase a face amount of $1,000 US, some which start at $10,000 US, and some which starts at $50,000 US. So it all depends on what you're looking for and what you can afford at the time that you're investing.
Okay. Awesome. Very valuable information that is being shared. I'm sure our viewers are very happy for the information that is being shared, and it can benefit them. I see persons here sharing, I have a goal, is having a goal. This is Lucille James. Having a goal is so important. One has just got to be focused and never take our eyes off the ball. Good advice. We have Odeon, the statistician, Grant, says, just to know that when we invest, it should be over the long run. Stock market investment is over the long run. So don't be a speculator. Any comment on that, Rokan and Nardio?
Absolutely. I agree with you so much, Odeon, because it is really not about, sometimes we do what is trendy. With the equities market and purchasing stock, it's not about being trendy or being with the in crowd. It's about doing your homework. Again, I can't stress enough, you are buying ownership in an entity. So it means that you can identify with the objectives that these companies want to achieve. And ultimately, it is not about just buying an asset. It is where is the company going? What are the fundamentals that will drive and support the company's viability? And therefore, it is not being with the in crowd. Do your homework. This is monies that you have worked hard for.
Right.
So just a reminder there.
Awesome, Rocky. I'm glad you touched on the word trendy, because we have different fashion styles that we speak about too. We have those persons who go after what is in style, what is trendy, what may fizzle out, for instance, before the year ends. We can still apply that to our investment style. Are we going for something that will fizzle out in a short period of time? Or is it that we're looking for something that is guaranteed and has a long-term sort of viability and can make that comeback in the future? So even if, for instance, there are variabilities, then we know that there's a possibility of a comeback, which is what we tend to see in terms of fashion trends, right?
Right.
Certainly. Okay, we are going to...
Some of them don't come back.
And some of them absolutely don't come back. So we don't want to be investing in those at all.
Not at all.
And certainly, I suspect that it is therefore important for us to have that dialogue with our financial advisors to get that sort of guidance as it relates to identifying our investment style as women and finding the right solutions that matches our investment style and will direct us rather to our investment goals.
Absolutely.
I just want to read a few of the other comments. Mark G says, stocks and bonds are an essential part of any well-diversified portfolio of investments. Valuable information from Nardia and Rokan here. So it spoke about diversified. What does it mean to have a diversified portfolio?
Well, you want to have a portfolio that has a good mix. And diversification is about having a good mix of assets, really. Because when one is doing well, one might not. If everything is doing well in the portfolio, then hooray. But however, based on how markets operate and just general trends, everything won't always be on the up. And therefore, what you want to do is to ensure that you have a mix of assets incorporated in your portfolio, so that you can actually cushion when the trend is not going in the same direction.
Okay, awesome. So tell us, Rokan or Nardia, what we've also heard the term discretionary portfolio. Share with our viewers what discretionary portfolio represents.
Okay, so a discretionary portfolio is really, as the word suggests, the investment is managed. It's a managed portfolio, and therefore the manager of the portfolio has the discretion to make the decision as to when you buy or sell an asset. And therefore the decision is being made, within the context of market, within the context really of what is best for the portfolio at that particular point in time. But the decision rests with the manager of the portfolio. Okay,
so how does a diversified portfolio benefit, for instance, a working woman who is busy, who doesn't have time to be selecting assets?
Well, that's just it. You answered the question, Nadine. A very busy woman who doesn't have time requires that level of support from their investment advisor and ultimately the fund managers who manage the portfolio on the back end. Therefore, what happens is you're busy, you don't have the time to be keeping up with what's happening in the market and being able to move in a very timely way. And therefore, it is important that, you're supported in that way. Whereas your fund manager will actually make the decision for you taking advantage of the opportunities as they present themselves without having to have you be involved. And that is where we talk about your investment working for you. You're supported in that way. It's a partnership. And therefore, you can continue to be busy. And the fund manager will be busy working for you.
Okay, awesome. Sounds good. Sounds like something we need to jump on, right?
Most certainly, if you're busy. And many of us women we're trying to juggle family. We're trying to juggle work. We're trying to juggle meeting the very goals that we have and aspirations that we have for ourselves. So any help we can get, is important and critical to the how we advance overall.
Is there any cost to having this done, Rokan?
A discretionary portfolio, it all depends. Yeah, well, there is a cost, but it's more so based on performance of the portfolio. So once the portfolio performs consistent with projected, then it's really a percentage that we would be taking. So there is a cost, minimal cost when compared to the value added, minimal.
Okay. So another question, both yourself and Nardia would have mentioned the different investment styles, being conservative, being moderate, being aggressive. Is it a situation where the portfolio manager will structure that portfolio based on my specific investment style?
Most certainly, Nadine. Right. So if you're a conservative investor, then really and truly you're looking to preserve your capital. So then we would put you in products such as our fixed type of investment account or a managed account. So it's less risky. Well, risky investments is what we would look at for a conservative investor. Maybe or giltage type account, which is pretty much safe and low risk, that's invested in treasury bills. It's a pooled fund or smart investor accounts where you can be locked in for, say, 30 days, 90 days, or a year on that particular investment. If you are a moderate investor, then you are looking for your goals tend to be more medium to long term. So we could look at even our income and growth type unit trust product. And that's an excellent account if you want to invest in the stock market. You don't have the time. It's the first time that you're doing this. This is a managed account. So GMB fund managers will choose the different stocks that they have in this particular portfolio. So you're benefiting from the stock market without having to do the work yourself.
Awesome. So I don't think we had gotten a clear understanding of what unit trust is. And I know Nardia just mentioned unit trust. Rokan, can you tell us what unit trusts are?
Sure. So unit trusts it's really a managed fund, and what you're actually doing and how you participate is to purchase units, but it's actually a mixed or a managed portfolio, and it's a mix of assets. Therefore, what you do, you have the opportunity. Again, you used the word diversified before, so it can either be a relatively conservative mix of assets, and you actually buy into that assets by way of units, and how you benefit from that in terms of growth would be when the unit price goes up. So it isn't significantly different. It's actually a managed fund, and therefore it takes, as Nardia had said before, it takes the hassle out of your having to buy individual asset types. You have everything together, and you can actually choose based on preference, or again guided by your risk tolerance, which of the asset mixes would be most appropriate for you.
Okay, awesome. We have a question here from Sansio. She's asking, what's the minimum amount to invest in the unit trust?
As little as $5,000 can get you started in the unit trust. I mean, there is the Giltage where you can start with a minimum of 100 units, really. So as little as $1,000 could potentially get you started in unit trust. So it all depends on which of the asset mix or the offering that you'd be interested in.
Okay, awesome. What are the benefits to us, Nadia and Rokan, to investing in unit trust?
Well, like Rokan said, one of the major benefits is that it's a managed portfolio. So it takes the work from you in terms of watching the portfolio. As I said, we're busy women. We don't have the time to sit down and be watching our portfolios every single night. So JMMB fund managers will do that work for you. So it's much easier. So, you'll come in for advice and we'll probably tell you that you need to keep this account for 2 years or 1 year, depending on your goals and your time horizon. So you have some unit trust accounts like the Giltage where we say, keep it for at least a year, because that's a more short to medium term kind of account, so it could go 1 to 5 years, or it could be the income and growth, which is a stock-based portfolio where it's a more long-term investment because you're investing in stocks and stocks are long-term.
Okay.
And if I could just add, there is also a real estate fund mix. And ordinarily, many of us aspire towards the ownership of real estate. And on our own, we couldn't necessarily buy some of these assets outright. And therefore, you'd have that participation and have the opportunity to be investing in real estate. And the rental income associated with those real estate properties is what the fund benefits from, and therefore that is another means of diversifying and broadening your exposure as it relates to assets that are offered.
Okay, awesome. So if I may dig a little deeper, earlier we spoke about diversification. Does an investor achieve that goal of diversification through investing in some of these funds that you spoke of?
Absolutely. And when we speak of the discretionary portfolio, it's really finding that the best mix that complements what the client's investment objective would be. And so most certainly diversification is at the heart of your investment portfolio. That way you're minimizing risk, whereas you're actually seeking out opportunities for greater returns. And therefore that mix, and based on the person's risk tolerance, based on the time horizon, all of those factors are incorporated in determining the best mix of assets to have in the portfolio.
Awesome. So another question, Rokan, how do I better educate myself about investing and managing my personal finances?
Okay, well, technology would have it being extremely easy for us. There are the YouTube pages. There are you want to get your information from a licensed financial advisor, most certainly. But if you're doing just basic reading just to get the investment 101, if you want to learn about the equities market, there is typically investopedia.com. Investopedia just got a plug there. Investopedia.com that actually helps to simplify just general investment terms, because sometimes we become a little intimidated when we're not quite clear on what is what, how does it operate, and therefore it's about empowering oneself. And even with COVID and we're working from home or we have a little extra time to do stuff, it's all about how we continue to add to ourselves, how we broaden our understanding of things generally, and how we can advance. And therefore, most certainly the first go-to, I would say, is definitely Mr. Google too. And as I shared, investopedia.com, Jamaica Stock Exchange has a lot of information on the various companies. It has their financials. It has the trading information. A lot of the different investment platforms or platforms actually have, or what we refer to as a market color, that actually gives you a summarized outlook on what's happening in the different, across the different markets and across territories. Therefore, if you don't necessarily want to just invest in Jamaica, you can diversify outside of Jamaica. You get what I'm saying? So there
Right.
are, I mean, as I said, we're in the age of technology, and we absolutely have no excuse as it relates to how we can continue to empower ourselves, right? By virtue of just taking the time out to just read a little bit more, and where you don't fully understand something, I mean, pick up the phone. We're always happy to share information and support our clients' continued learning and growth. I mean, that's a part of the partnership. It's a part of the work in terms of supporting our clients to get into their investment objectives. And that is through financial education as well.
Awesome. Nardio, tell us, for somebody who wants to get started in investing, they want to start their investment journey. They want to look at meeting some of those financial goals that we highlighted earlier. You know, the achievement of the house, the car, the education, you know, the children's education, being able to purchase that tablet or that laptop for their child. How do they go about getting that done at this point in time? What's the first step?
All right, so it's very simple to open an account with the JMMB, ID, TRN, proof of address. That's all you will need to come in with. With as little as $1,000, we can get started on an account for you and get the ball rolling that way. So it's very, very simple when you come to us at JMMB.
Are there any other documentations that might be required?
No, when you come in, we'll ask you for 2 references for you to just know the person's telephone number and name, like a JP, lawyer, pastor, or a doctor, or an existing JMMB client. It's just their name and telephone number that we need. So it's very, very simple. ID, TRN, and proof of address, like I said before.
Awesome. So we're going to be feeding a question. This question is to you, Rocky. Short of it, from our online platform is asking, do you look at world history when making financial decisions?
We do to an extent. The only thing is that history, it is good in terms of just having a general understanding as it relates to how things can impact a market. The thing about it is that past does not necessarily predetermine what will happen in the future. And therefore, we are exploring history from a place of just recognizing the what could have happened and potential impact. However, it doesn't predetermine the what could potentially happen in the present. But yes, to an extent, we do look at historical information.
So pretty much you're saying the past is not necessarily a determination of the future.
Absolutely.
All right. Thank you so much, Rocky. Short of it, I trust that answers your question. All right. So, Rockon, share with us, having gone through women's investing style and the different options that are available to women, what is your final nugget for tonight?
My final nugget would actually be read, empower yourself, dream big. The sky is absolutely always, but you're not limited. You're not limited in any way, shape, or form. You're not limited by just what you earn. You are given multiple talents that give us the opportunity. Sometimes we do things and we do things for free. And We are often not tapping into our greatness sometimes, and therefore we underestimate the things that we can actually achieve. And therefore, I would want to say, don't limit yourself. It's easy to get started. It's just the mindset. It's about just making up your mind to take that first step for you to get to the goals that you want to achieve. So get ready to make that first step.
Awesome. You couldn't have said it better. Thank you, Rakan. Nadia, your final nugget for us.
Well, for me, it's asking yourself why. Why am I investing? What is my ultimate goal? And once you've discovered what your why is, then you use your God-given talent to help you achieve those goals. I mean, whether it is starting your own business or, like I said, putting the funds aside that you need to reach that particular goal. But once you've established your why am I doing this, then it makes it so much easier for you to achieve your goals.
Awesome. So our why is important. We need to identify why it is that we're doing this. And then we need to be determined and focused, as you said earlier, on our why. Well, thank you so much, ladies, for sharing that valuable information. I believe we added value to our guest this evening. This has definitely been an interesting discussion about women's investing style. We also want to thank our audience for joining and engaging with us on our Goal Getter live webinars. So each week we will continue to go live with webinars where JMMB's financial experts and other dynamic guests share on how we can navigate these challenging times. So we want to encourage you to continue to follow us on our social media channels for next week's topic. Our promise to you is that we will stick with you because together we are stronger. So stay tuned and stay connected with the JMMB as your financial partner with your best interest at heart. We ask that you continue to stay safe and do all that is necessary to protect yourself and your loved ones. Good evening, everyone.